Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to do our daily technical analysis update of commodities. We're going to take a look at the dollar, yields, precious metals, and the commodities and ETFs that I follow. I'm going to give you my financial opinions. And if you guys need help with anything, definitely check out finding-value.com. Platinum membership, the word discount for a discount in the coupon code. We do have a 5 p.m. Mountain Standard Time question and answer session coming up on Sunday. Love to see you there, and you can ask whatever questions you'd like. So let's dive in here. We've got the DXY. The DXY is all over the place. We're lower today, 0.53%. We got a little wick at the bottom. We're still above that long-term support line, that white long-term support line that has been there ever since the 1970s, at least on this index. So we're sitting on top of that very strong support level. We're going to go higher, we're going to go lower. I think that the DXY is going to be correlated to wherever interest rates go. So if interest rates go down, I think the dollar will go down, the DXY. If interest rates go up, I think that the DXY will probably go up. So it depends on interest rates. So if we look at interest rates, this is the 10-year yield. We are also moving all around this big long-term support line. The big long-term trend line is this trend line that's all the way at the top. We broke out of it, and we've been trending sideways on top of it. On a longer-term basis, I think we're going to go higher or sideways for a period of time. The question that people are going to ask me, well, what's going to drive yields higher? It could come from it could come from multiple things. The housing market being undersupplied is one area. Inflation from deficit spending because the interest payments on the debt are going to be increasing. And then we also have problems on the supply side of commodities. And the combination of all three of those things together, I think, will lead to eventually higher interest rates, or at least interest rates that remain high. So sideways to higher is kind of what I would think is going to happen. The 30-year yield also came down a little bit today, down 0.43%, but we're still within this gigantic triangle. That triangle generally breaks to the upside, but it hasn't broken out yet. So we have to wait and see. When a lot of fear is in the market, interest rates generally go down. People run into bonds. When inflation or a problem with deficit spending or a bond market crisis, if something like that happens, we will see interest rates go up. And if interest rates go up, it's going to completely reprice things differently than interest rates going down. What I would think, if interest rates move on up, I think we're going to see a rotation of money into commodities. And I think away from, obviously, bonds and away from stocks. And it won't be as intense in stocks as it would be in bonds. Bonds would be the direct problem area. Bond prices today, at least, are holding steady. They were up 0.5%. So again, if we look at a big picture view, we've got that topping pattern. We've broken the trend line to the downside here. And we might come back up for a move lower. If this comes back up, it means yields are going to go down for a period of time. So if we look at the 2-year yield here, that is what could potentially happen, is bond prices go up, yields go down for a little bit with a scare in the system. Maybe it's from the banking crisis and banks failing, whatever it is. It could come back down. That's that head and shoulders type pattern that we're seeing right there. Big long-term view, though, this has broken the big breakout of this long-term trend line, and we could see a return move. So that's where we're at. And if people, they think so short term, when you think longer term here, this is going to probably go higher to sideways in a higher interest rate environment. It's going to price assets differently for a period of time. And then once it goes sideways, things will calm down. So it depends on where the interest rates go in the short term. The TYX TNX ratio continues to move favorably today, at least, to the upside, where it gives a little bit of tailwind to precious metals, especially gold. The asset that correlates well to this is gold. Silver correlates a little bit less, and platinum correlates even less than that. But the highest correlation with this is gold. So when this goes higher, gold will most likely move with it. At least historically, that's what it's done. The CRB index selling off more today. We had definite weakness in the energy prices. I don't think that the weakness in energy prices is fundamental. I think it's driven by the financial markets and liquidity and all that stuff. So really what it's doing is just giving you a better buying opportunity than a regular market would. So we head down with the CRB index. We're coming back down in the CRB to S&P 500. If I zoom out here, you can see we've got the bottom here. I took it from the bottom all the way to the top. We're almost to a 0.618 return level. And that's generally where we go for a return move between wave 1 and wave 3. So wave 2 that we're probably in could bottom out here around 0.618. If we get a really nasty pullback, it is possible to get all the way down to 0.786. But the general rule of thumb is 0.618 on this return is a general rule of thumb for a lot of pullbacks like this. Gold up a little bit, up 0.63% today. Still looks good. Still looks good. And we had good market conditions today with that TYX TNX ratio moving higher, just like gold moved higher today as well. Silver also following suit, still looking good. I don't see any reversal candlesticks. Everything's intact. We're above support. There's the blue support line. Everything looks good. Platinum down a little bit, still doing its return move thing on a longer term basis. Depending on where you grab it and which ones you hit, it still looks good on a longer term basis. Platinum, from a supply demand standpoint, we could see some really tight supply side problems with platinum. Palladium also could have some supply problems coming out of South Africa. XAU to gold ratio down a little bit, but again, still looks good. It's a small little down day today. No big deal. I'm still expecting this gold and silver ratio against gold to work its way higher over time. That does not mean I think it will happen immediately. I know when I get bullish on stuff, I've been bullish since 2016, guys. I've been bullish this entire run. Some people say, oh, you're wrong. It's going back down. Oh, you're right. Oh, you're wrong. What I view this as, if you have assets, is I accumulate assets down here. And then when it breaks, that's when I'm going to get ultra, ultra bullish on the gold and silver mining companies. We haven't broken out yet. We still have some time to go. We're watching it. We're monitoring it. Very good opportunity here. GDX up a little bit. Not as much as gold itself, but if you look, we're right at the top playing with that resistance level. We'll see if we can break here. It may get stuck. It may even get stuck for a month or two. So you got to be calm, got to be patient, and you got to find the companies that you like. And that's the way that I do it. GDX J, I added this one too. This is very low right now, guys. Low, higher low. These lows are coming, and they're starting to step up a little bit. And we've got that resistance at around $51. So we'll see what happens over the next few months, and if we can get moving to the upside. SILJ also breaking out. There's our little breakout. We did a little retest. This is generally a good spot to be looking, at least where I look, for potential investment opportunities. Crude oil getting shellacked today. It is getting hit. A lot of market conditions, a lot of fear in the market is pushing the financial product lower. We saw a gigantic draw on inventory of about, was it 3 or 4 million barrels? 4 million barrels, I think. I think it was 4 of inventory. The physical markets is not driving this, in my opinion. It is financial markets. It is the market conditions. It's the fear in the market. Banks going belly up. The banks could be unloading physical oil holdings because they have to raise cash. Could be a liquidity type problem. Whatever it is, I don't think it's related to the physical markets. I think it's giving us an opportunity. It doesn't mean that this is over with. We've got some pretty big selling pressure these past 2 days. I don't jump in front of momentum like that. Just wait for it to calm down, wait for it to turn around, and then I'll start looking to add to positions. It's the way that I'm going to look at it. Natural gas also heading lower, but again, this is basing out. Let it base out. It's got to work through inventory. We got to get some weather changes to get through that inventory a little bit. XOP, yeah, you know me, it's down today, down about 2%, but it's not down greater than the crude oil price, which was down 4.7%. We could be trying to put in a bottom here, but I'd like to see some positive signals before making any sort of action. We do have a bullish engulfing. We do have a bullish piercing. That created this move higher. We hit our head on this resistance line, turned around, came all the way back to where we basically began, and we have support. So we're coming into support. So that's a positive thing. If we back out a little bit, though, there is a possibility that we get down to $100 a share. We break out, come down to around 100-ish, and then head higher. That is an inverted shoulder, head, shoulder that would have played out, and it works very well with the market conditions that we have, that we're undergoing right now. OIH is also getting a little bit of selling pressure. Today, minus 1.25%. It's not a huge down day for what oil and natural gas has done. So again, I don't like jumping out in front of things when they've got momentum to the downside. Let's see what this thing does over the next week or two, and or less. We'll see what it happens, and we'll see what the trading does. There is a possibility we even get close to, all the way back down here, even if it gets nasty enough. Sprott Physical Uranium Trust, we are still inside of this big pattern here, but it still looks good. I like that we got that nice big buying pressure move through these couple of trading days, and we kind of come back and we're just kind of bouncing sideways. I think we could still launch here if the buyers want to launch it. So I'm just watching it, and I think the equities are cheap, and I'm just watching the physical to see where this thing goes. I think this will go first, and then the equities will go second. The equities, even though we've had all this strong selling pressure in the market, it's really just going sideways. That is a form of strength. I think it looks good. As of right now, it's just kind of in that dead period, moving sideways. The dead period's when you've got the buyers and sellers equal to each other, not making any progress up or down. The sellers are exhausted, the buyers are exhausted, and we'll see if the buying pressure comes in and pushes it. Again, we haven't seen that yet. Looking at TAN basically flat today, and we'll see where this thing goes. I'm not 100% sure that this thing's just going to dive lower. Weak market conditions, and we're just kind of hanging out. Copper, COPX, ETF, again, we're hanging out, moving sideways. I don't think copper looks that bad. I mean, yeah, we could pull back some to the support level, but it's not diving, at least not yet. Doesn't mean it can't. So I'm kind of just sitting here waiting, seeing what copper is going to do, at least the ETF. Lithium's also doing that same thing. We're consolidating. I think we're getting close to a potential decision point if we're going to puke to the downside or if we're going to rip to the upside. Generally, you get three kind of, we'll call it three humps, and it looks like we're getting close to something here. So we're coming to the tip there. We've got REMX is doing the same thing. We're coming to the tip there. I am upside bullish on the longer term. This is a double bottom, and I think eventually it'll work its way higher. It doesn't mean we can't have a false breakdown before moving higher. So that's REMX. The S&P 500 is looking a little bit crappier, I'll call it. Getting a little bit more selling pressure over here on the right-hand side, and we're at that resistance level. We haven't really broken out and held above it. That's what we're looking for. NASDAQ's doing the same thing. It's right at that support level, and we're a little bit underneath it. Haven't broken to the upside yet, and we're just kind of right underneath this resistance area. And we are starting to put in a little bit more of a bearish pattern. But again, this can change very quick on a week-to-week basis. Emerging markets down a little bit. We've broken this downtrend line, and we're just moving sideways. Doesn't look bad. XHB up a little bit. And again, the home builders have been very resilient and strong. And they don't look that bad in the short term. They don't look horrible. I mean, it doesn't look great, but it doesn't look horrible. It's still holding together. Moo down a little bit. Could we see this head down a little bit? I think we could head down a little bit more to this support area at $70, $70-ish. Copper, right on support. So short term, we're right on support. Small little candlestick there, doesn't look bad, and we're right on support. We have a lot of support underneath us. There's a lot of support through here. So I think that it still looks good and is poised for a move higher. I think it's just waiting for something, whatever that something is. Markets to calm down, fear to reside. Maybe it's money printing by the Federal Reserve, whatever it is. I don't know exactly, but it looks fine and it looks good and it looks well poised for a potential move higher still. Lumber up a little bit. There's the big long-term support line that we've got going through, and we're just underneath that support line. Short term, we're just bouncing back and forth. Maybe you've got some sort of pattern that's coming. We'll see. Iron ore down a little bit, but again, we're in that general location where I thought we would come back for a return move, a potential return move. Now, I don't make predictions. I just potential area of support. Nickel, 0.5% higher. Again, it's hanging in there, just bouncing sideways on the longer term at a very high elevated level. Aluminum still bouncing sideways. Sideways, sideways, sideways until the market calms the heck down. Baltic Dry Index down a little bit. Again, I think this chart looks fantastic for a move higher on the Baltic Dry Index. Coal up a little bit, 1.3%. Generally, you get a bounce, and then you get a sideways motion sideways, and then usually a launch higher. So more sideways movement or higher in that. Ethereum down a little bit. Again, just moving sideways, along with Bitcoin just moving sideways in here right at support. So that's what I've got for today, guys. That's what I'm seeing in the markets. Gold's still looking, gold, silver, and platinum still look very, very good. I would say those are the best looking of the group. I think it's coming into market conditions where it's going to perform favorably well to the upside. Oil, uranium, the energy group, energy service sector, they're getting hit. They're getting hit in the mouth right now, heading a little bit lower, and I think it's due to the financial conditions. It's not due to the fundamentals of oil itself or the energy markets. Once this funk is behind us, and I don't know how bad it's going to get, I don't know how far it's going to go down, but once it gets behind us, I think that the fundamentals are going to want to push it higher again. If the market needs more liquidity, if the market needs some sort of money printing, that is going to benefit precious metals, especially. It will especially ignite the junior companies because that is when they take off. That's the market area that they take off. It will also reignite all those energy stocks because they're inflation sensitive. And if money comes into that system, and it can come in from the housing market as well, but remember, we're coming off a stimulus overhang here. That stimulus money will come, the stimulus overhang, it's kind of have to bleed out of the system, and then the housing market and the loaning from the housing market is going to have to sustain the inflation. If we have problems in the system, they print money, it goes into the system, it's going to go where the shortages are at. The shortages are in these sectors. This is what's going to benefit, in my opinion. So that's what I've got for today. Give me a thumb up for the content. We have a midweek update for the Platinum members on the website. I'll post that up here shortly, create the video and post that up. And then we've got a 5 p.m. Mountain Standard Time question and answer session for Sunday. We'll see you guys there. That's what I've got for today. And we'll catch you next time. This is Finding Value.